Hello and welcome. I'm Brian Day with GSQ Insurance. I'm following an article today out of the Insurance Journal that was published on January 6, 2020. I'm reading the article off my phone here because there's really no need to print this out on paper when I'm only going to throw it away once I'm done with this video. So bear with me here. The article is titled, Insurance Market Shrinking as Senior Industry Living Grows. Now, it's no surprise that we as Americans are living much longer than we did decades ago. And in the article, they mention that according to Harvard's Joint Center for Housing Studies, the population of those over 80 will double in the next 2 decades. So this sounds like fantastic news if you run nursing homes, long-term care facilities, and or skilled nursing facilities. There is, however, a major issue that we've seen developing in the insurance industry that is pointed out quite eloquently by the Insurance Journal article. So what we're seeing is a hardening of the market for these facilities that are taking care of our elderly. What does that mean? It means we are seeing less companies willing to write these policies, specifically general liability and professional liability. We are also seeing premiums skyrocket, deductibles, also known as self-insured retentions, going through the roof. We're seeing a limitation on not only the coverage offered, but the limits as well. So let's go over this. In the article, they mention some trends that we are seeing ourselves at our agency and other agencies that I know. Businesses in the elderly care industry are seeing premiums go up as much as 15%, and this is for companies that have very little to no claims in their recent history. The worst offenders are seeing their premiums double, if not triple. Now, why is this? There's a lot of reasons, and I'm not here to defend every little thing that every insurance company does, but let's take a look behind the scenes, if you will. The actuaries for these companies are having a very difficult time figuring out what rate to charge. You see, the actuary's job is to determine what the likeliness of claims are and how much these claims could potentially cost. And current day, as mentioned in this article, they're having a really hard time. They're looking at claims that may look like they're smaller in nature, may only cost around $50,000, but they end up being settled for $1 million. The inverse is true as well. They could be looking at claims that look like they're going to be very large settlements, and they end up settling for around $50,000 or so. Now, what this does is it makes it really difficult for the insurance companies to determine how much to charge. What happens when insurance companies become uncertain of what to charge? Because you see, insurance companies are driven by data and numbers. They love numbers, they love stable numbers. It allows them to provide competitive pricing that still allows them to profit. Anyways, let's move on. So, these insurance companies are leaving the market dramatically because some of them simply don't know what to charge and it's no longer profitable for them. The companies that are remaining, which are very few at this point, they're increasing their premiums, which is the cost to you, the client. They're increasing the deductibles. What we used to see around $5,000 can now be a $100,000 deductible. Just imagine, you're getting sued and you have to come up with $100,000 out of your company's pocket as your deductible. That's not very good. Furthermore, we're seeing the lines of coverage reduced, we're seeing more exclusions, and when it comes to key coverages like abuse and molestation, we're seeing the limits drop from these 7 figures that we traditionally used to see down to as little as $100,000 to $300,000, which in the instance of a lawsuit, those limits can be eroded quickly just by legal fees, the cost of your attorneys. So by the time a settlement is reached, there's very little left of the limits to pay the settlement. Thus, the company may have to come out of pocket for those settlements. Now, I know that's a touchy subject, but let's be honest. Every industry has a small amount of individuals that are ruining it for the rest of them. Now, when it comes to long-term care, nursing, any sort of elderly care, from what I've seen, there's a lot of very compassionate, loving people that are doing what can be a difficult job, and they're doing it pretty well. Yes, there are people out there that are ruining it for them, and we're going to get to some things in a few minutes that may help mitigate that if you own or operate these facilities. But let's focus on the big problem here. We're losing options here in this market. It's increasing costs and declining the coverages. So when I'm faced with a problem of any nature, I go looking for solutions. And in this case, I have found one, an exclusive program written by an insurance company that is not owned by their shareholders, but by you, the insured. This allows them to provide much better rates because they're not having to pay shareholders dividends and profits. So this gets to go back into the coverage. Now, I'm not going to specify the company here, but if you're interested in a quote, if you're running or own any of these sort of facilities for elderly care, shoot me a note at briand@gsq.com. I will have my email linked below, as well as this article from the Insurance Journal. So, what can you do aside from contacting me for a quote? There's a few things that are recommended in this article, and I think some of them are very valid advice, which we often advise our clients in general. The first and foremost is documentation. Anything you can do to better all of your documentation will do you well. Speak with any business attorney and they will tell you that documenting, updating, and reviewing your employee handbook is one of the most powerful things you can do. Making sure that what is expected from your employees, as well as disciplinary action that will be taken for violations, and making sure it's updated and current with the laws in your state and your jurisdiction can be a very powerful tool to help mitigate lawsuits. With that in mind, documenting every aspect of your patient's care and their condition can also be a very powerful tool. Sometimes these companies are sued because of an elderly person who passes, and the family may believe that it's a responsibility or at fault of the caretakers. So if you're able to accurately and adequately document the client's condition, any changes in that condition, and decline of that condition, it may help you, because we're talking about medical records here. Now, there's another piece of advice that this article does provide. This may be a little tough for some to swallow, but they do suggest providing background checks, or not providing, but doing background checks on your residents. That way you have a better idea on who you're working with, who your customers are. That may not be comfortable, that may not be easy, but it is a suggestion that we are seeing from the insurance side of the business. Now, insurance, we're not known for being the most warm and loving industry as a whole. So understand that this is coming from a monetary standpoint. It's to help save you money and frustration of being sued and not having the adequate coverage or limits. So in an attempt to keep this short and not go on forever, I'm going to go ahead and leave it here. If you have any more questions, please feel free to comment below or send me an email at briand@gsq.com. This exclusive program that I'm working on is not available in every state. They do, however, write in multiple states, and we may be able to get permission if you are a multi-state industry or company to write even in states that they don't traditionally write in. So I'm happy to explore the options with you and take some time to see if this is a good option for you. Until next time, stay safe and have a great week.